Hi guys. Today we will analyze KB Home stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a bad performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Strong support level is around $27.50. Next strong support levels are around $25 and $19. Strong resistance levels are around $33 and $35. Next strong resistance levels are around $40 and $45. In the last month the stock has been trading between $27.40 and $33.70 range. It is currently trading near the lows of this range. The stock has an average volume of 1.2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 11% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 114% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for KB Home Company: bad, average, and good. First scenario. KB Home will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 5%. Future free cash flow to net income rate would be low, 40%. In this case, the fair value of the stock today would be $27. Second scenario. KB Home will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 6%. Future free cash flow to net income rate would be average, 50%. In this case, the fair value of the stock today would be $40. Third scenario. KB Home will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 7%. Future free cash flow to net income rate would be high, 60%. In this case, the fair value of the stock today would be $55. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 7.3. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For KB Home, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 3. Again, I will use 3 different scenarios for KB Home Company: bad, average, and good. First scenario. KB Home will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 3. In this case, the fair value of the stock today would be $13. Second scenario. KB Home will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 4. In this case, the fair value of the stock today would be $19. Third scenario. KB Home will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 5. In this case, the fair value of the stock today would be $26. As you can see, today the stock is overvalued, $28, even if we expect the company's high performance in future. While the company has a medium profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. The stock looks fairly priced at the moment. However, the stock has been in a downward trend since January 2022, and it can go lower, before it recovers. I like the stock at current levels. But keep in mind that the housing market is tricky, and it has elevated risks. Demand for new homes has materially fallen recently due to higher rates. Do your due diligence before buying the stock. Company's strengths. KB Home is one of America's largest builders, with a focus on affordable housing and first-time buyers. About 80% of the company's communities offer homes that are under 1,600 square feet, providing affordable options for millennials. The company has built more ENERGY Star certified homes than any other builder. KB Home is doing well so far, as it benefits from easing supply chain problems, strong gross orders, and its ability to raise margins. Housing is likely to get a further boost as Americans put more value on having a safe place to live, work, learn and relax. Management's focus on communities with higher gross margin potential, more affordable home designs, and financial strength, should help KB Home over the next year. KB Home's build-to-order model allows buyers to personalize a home that meets their needs and budget. It also helps to control supply chain risks. Analysts are seeing a migration from cities, and a buyer preference for brand new homes. The company has paid off some high-interest debt, increased and extended its revolving credit facility, and repurchased shares. The company's return on assets of 10% is amongst the best returns of the industry. The company's return on equity of 20% and profit margin of 11% are comparable to the industry average. Risks. The greatest concern is that inflation has pushed mortgage rates higher, and hurt affordability and home prices. The cancellation rate is 17% of gross orders, up from 9% a year earlier. Home building industry is cyclical in nature, and tied to the health of the economy at large. Significant buyback activity is not expected in the near term, as the company is more likely to acquire land if it wishes to deploy cash. KB Home and other builders will need to carefully manage their inventory of land. Having too much or paying too much could be a problem if the market cools. Having too little can leave a builder chasing expensive land and realizing unfavorable margins. The company faces competitive risks to large home builders, who can leverage their scale to secure greater construction materials, larger land inventory, and subcontractors for skilled labor. KB Home is subject to legal and warranty claims. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.